This is a rare opportunity. I don't do these very often. I don't know if I'll even continue to do them, but make sure you write down your hardest financial questions, because you've got the guy to answer those questions. I'm not a marketing guy. I'm an actual hardcore guy from the back of Wall Street. I train the guys on Wall Street. All the stuff you're going to hear and all the different talks today are things that I teach these people. I'm the source. So ask me any questions that you have not gotten a satisfactory answer to. Number one, let's talk about, let's go ahead and fly into this. This is a presentation from 2015, and I've been doing a presentation about how I made $116,000 in 3 months in Fiat Chrysler. I actually made $250,000 in Facebook as well, between those two stocks in the in the first part of this year. And I'm up around $40,000 just today alone. So, what I want you to understand is that your highest possible returns come out of the stock market. And then after that, if you were to say, well, where could I get the highest expected returns? After that, there's a really good article called Momentum and Value Everywhere in the Journal of Finance, which is the best publication in the world in the area of finance, which is what you're listening to right now. This is a whole thing of experts talking about finance. And they showed that the highest expected returns are in stocks. And then after that would be futures. And then Forex was horrible. Forex failed to generate returns on average that outdid bonds. So when I look around me and I say, okay, was this research really correct? And I know a lot more people in finance than you do. That's something I can absolutely guarantee you. I'm flying to Bucharest, Romania, because I'm the co-chair of a major academic finance conference. I've got Professor Sheridan Titman coming in from UT Austin, who's one of the 10 most prestigious professors in finance who discovered momentum, which, this last talk you were listening to was talking about momentum breakouts in Forex. And the reality is that momentum breakouts in Forex are some of the worst places to go out and try and find good returns in the market. What you have to do is you have to focus on the markets that are going to give you the fattest returns, and the fattest returns in the stock market. Now, the good news there is that if you know that the fattest returns are in the stock market, you're going to have to cut back on your taxes. So if you trade in a Roth IRA or a Roth Solo K, and it's a lot of work to set up a Roth Solo K, but if you can do it, you can trade all of this stuff, whether it's currencies, whether it's futures, whether it's Forex, without paying any taxes. And that's what none of these guys explain on any of these talks, is how to eliminate your taxes. If you went out and made $40,000 this month in Forex, and then the month after that lost $60,000, you get hammered in taxes because of the way the IRS treats Forex trading and futures trading when it's not done in something like a Roth Solo account. And again, if you're going to make money in these markets, and if you're going to hold on to the money in the markets, you're going to have to rise above being a chump, somebody who doesn't have a whole lot of knowledge or a whole lot of acumen or a whole lot of training in the markets, so that you're not a target of clever marketers, either from Wall Street or from the info marketing industry. So I encourage you to work very hard on training yourself to become an extremely knowledgeable investor. I'm going to give you a couple of fantastic opportunities at the end of this talk. And I wanted to add these things, because I know the stuff that I just talked about is not very well embedded in this presentation. And if I don't do this presentation, I'm going to wander too much. So I'm going to rip through this presentation real fast, and then I'm going to answer all your questions, because that's what this is all about. And I've got really low-priced offers. It's not like $3,000 offers or anything. So stay tuned to the end, and here we go. How to build $1 million portfolio from scratch. You can use to find the next double or triple digit hot value or momentum stock. I talk about triple digit, and actually I had my first 300% plus return using my system for tapping momentum in the stock market. And like I said, why the stock market? Because the highest expected returns are in the stock market. But before we get started, look, there's 3 outcomes today. Either the trade mentor community is not a fit for you, the trade mentor community is for serious traders, or you're not a good fit for our community. That's important too, because if you're asking, there's just certain people that I just cannot handle. Not very many. I actually have very, very high positive ratings from my MBA students at the University of Puerto Rico, and wherever I teach, I get very, very favorable ratings. But the people that I can't handle are the ones who are constantly have their ear to CNN in particular, if they constantly have their ear to investment newsletters out there. There's a whole bunch of investment newsletters. There's Oxford Club and whatever, Sovereign Society, and there's all these newsletters. So you guys all know where they are. And if you're one of these people that are religiously reading all of those recommendations in that newsletter, and that's what you're feeding your mind with, this community is not for you, because you have to rise above that low level, like hammer them with marketing, put the butts in the seats, suck the money out of the wallet, stuff that is going on out there that doesn't do anything for your wallet. So you're going to have to figure out fast whether or not you're right for this community or not. And if you're not, that's fine. We avoid any conflict before we begin. There are some people on this call who are absolutely a perfect fit for the community that I'm going to show you now. So what are your expectations? This strategy is not in the news, but is proven by academic studies to work. It comes from my research. Oh, and by the way, one of the reasons I'm trying to warn you that the expected returns are really dismal in Forex is because if you can eke out returns month after month, like they were talking about on the last talk, then you're going to slay it when you go over to futures or you go over to stocks. So even though you'll never hear anybody that bad mouths currency trading worse than I do. You just heard me do it. I just said it was worse than bonds. However, one of the best traders I know became very wealthy in Forex. And because he can do well in Forex, when he learned what I teach him, what I do in stocks, it's really allowed him to grasp the power of what I'm doing and to diversify himself away from Forex. Because the problem that Eusebio has, he's a very wealthy Forex trader over in Europe, we're good friends, is that he's glued to the screen. So he's stuck on the screen all day long. And so what I teach you is a way to invest in the market that doesn't take more than a couple of hours a month at best, because you're going to set up positions and then you're going to sit and you're going to do nothing. But the reason I'm telling you all this is because the sitting and doing nothing produced my first 300% return. This is from 2015. So I had a return over 100%, but I hadn't hit the 300% mark. And I actually did that this year. I'm really pleased for myself for that. I know nobody else is, but I am. You have to understand that investing and trading is a very lonely business. We do this best if we're doing it by ourselves and we're not allowing our minds to be contaminated by noise from outside. Things like investment newsletters, things like Jim Cramer's Mad Money. Those are the kinds of things that contaminate your mind. Like, for instance, right now, if you go out there on the internet and you ask people, is the market, well, you say, is the market bullish or bearish? You're going to get very conflicting views. And so what happens is people allow themselves, they sell their positions out, for instance, when the market's rising, they cut the position short. And alternatively, when the market's going against them, they hold out false hope, so they keep riding their losers. And so what happens is you have this dual bad effect that ends up destroying returns of the typical investor. That's kind of like one of the strange things is you have to remember I'm a big speaker. I used to be a really big speaker at Oxford Club, and I got tired of the circuit, and now I trade on my own. And I'm doing these talks as a favor to Lan Turner over at Trade Mentors. That's why I say, ask me questions while you've got the opportunity, because I'm doing it for now, but it's not exactly that I just love to get up here. So if I stop doing this, then you don't have any way to ask me questions. Because as I go over time, I like my privacy. And so my courses are becoming much, much more encapsulated, where you just get less and less direct time with me, because I just don't have time. I'm too busy with my trading and investing and with my school stuff. So like I say, these kinds of calls, you see a training, you want to ask a question, get on and do it. Nobody was talking about Berkshire Hathaway in 2013. I knew the odds were in my favor for a rise. This is the single greatest set it and forget it strategy documented. So again, I want to remind you, don't not do Forex, but go into Forex with wide-eyed, open eyes, knowing that of the three arenas, futures, Forex, stocks, Forex is the hardest to make money in. And if you can do it over there, because you can actually get over there and trade with less money, and you can prove yourself, then you come out of that gladiator pit, which is a small money pit, and come up to the big money pits of futures and stocks. Again, you can start with really small amounts of margin in Forex, and that's why so many people are marketing Forex trainings, because it appeals to people that have very little capital. Maybe you have $5,000 saved. That's not very much money to go trade futures and stocks. Of course, you know, you should be operating through a Roth IRA, so you should be at least putting 5,500 or 6,500 into a Roth IRA. So hopefully you do that, and then you've only got 5,000 left after that. I'd say, yeah, give it a shot in Forex, because Forex is dirt cheap. Like I said, it's the little tricycle sand pit. This is the big sand pit over here, the biggest, which is the stock and stock option sand pit. This is where we get big, bigger than anywhere else, bigger than futures. These are where the highest net worth people are. I knew why the odds were in my favor for Rise Berkshire Hathaway. This is the single greatest set it and forget it strategy documented. You can grow retirement savings or develop an annual income. Why listen to me? I'm a finance professor at University of Puerto Rico. I did my master's at Thunderbird, my PhD at South Carolina. Been married for 2 decades. I'm a solid, stable guy. And my favorite saying is, everything you've ever wanted is on the other side of fear. And man, that is so true. My best trades, where I make the most money, is where I have to blast through fear. Super well connected. This is the Secretary of State of the entire island of Puerto Rico, Secretary of Economic Development and Commerce. I've done a lot of work with him. I've been on really big panels with the Oxford Club, for instance, the Wealth Survival Summit. You know, I'll get with these guys and we'll get in the back room and you'll hear the way these guys will talk about you, the AKA butts in the seat. And they'll say, oh, none of those guys can make any money. You know, none of those people are serious. And these are how these speakers actually talk about you in the background. And, you know, that's why I kind of left the circuit. I got a little bit tired of it, because I am here actually to help you. I'm not going to pull the rug out under you and, you know, run you over with a car or anything like a lot of the quote unquote marketers might do out there. Now, our retirement's coming. And so we're looking to, like I said, me not doing any more of these. And charity begins in home. We have, Marisol and I have done well in terms of money. And so we take care of her mother-in-law and father, my mother-in-law and father-in-law. We don't want anybody going to the old folks' home. So, you know, that's her taking care of her mom. And she's over there. She should be getting there about now. So we have 2 different condos. We live in one condo, and then the rest of the family lives in another condo. And right now is life support for our mom. So that's a big thing. That's why I'm not traveling very much. So the fact that I'm going to Bucharest, Romania is a very unusual thing that I'm doing. Most importantly, I trade. What was that? Apple. I made a ton of money on Apple, and then they had the big hit, the big drop in 2015, which was like towards the end of this year. And I gave up an enormous amount of profit in calls, but then have completely regained it and made much more than that. So whatever you're doing, whether you're trading stock options or futures options or stocks or futures contracts or Forex contracts or currency ETFs, whatever it is, I don't know a single profitable, super wealthy trader that has a non-bad month. Now, I've heard some documented, and I believe it is possible, like, for instance, Buzzy Schwartz, write down that name, Buzzy Schwartz. He's got a really good book on Amazon.com. And he had a pretty unbroken record, but he was trading the E-mini futures. He wasn't trading stocks or Forex. In January 2015, man, that account was tiny back then. I've got a bunch of different accounts, and that account is a lot larger than that today. This is back in 2015. I made $10,739.71 on one day, which was January 8th. And now my position sizes are a lot larger, so it's more that this would be more like 40 or 50,000 in a day. How can what I know work for you? I mean, when I say how to build $1 million portfolio from scratch, I've done it. I'm actually showing you how I did it. I trained over 5,000 students. That's funny. Back in 2015, I had 5,000 students. Today, I have just shy of 20,000 students. So I've grown a lot since then. Like I say, I don't get out in public and talk very much. So like I say, give me your bad questions. I faced every challenge you possibly could. I know your struggles, and I'm trained to guide you better than anybody else. My PhD cost the University of South Carolina $450,000 in salaries of just my prestigious professors. The wealthiest 1% of America seek me out for advice, from Beverly Hills to the Hamptons, literally, no joke. In fact, I've got a friend of mine, a family, really nice Jewish friend, family friend, and a friend of mine, actually through my finance, because of my finance career, and his father started as a used car salesman back in the Midwest, and back in the 50s when the big 60s when the big housing boom came in, got deep into the housing boom. They ended up into hotels and then oil. So when I'm out in Beverly Hills, I stay with them in their condo. They have a really nice condo that looks out on Wilshire, that looks out over Beverly Hills, and he's got a Rolls-Royce Phantom, a $350,000 car, you know, the one. And I've really funny because Marisol got picked up in the car. She couldn't believe it. And then we were going to Spago's because my friend is friends with, what is it, Wolfgang Puck. So it's fun because when we were at Spago's, we're talking to stars and stuff, because he's been an old timer. He's a really rich old Jewish family. And they reach out to me for advice is the main thing. And we were driving down the road, this funny story. And all these people, we saw these tourists taking photos of us. And I thought, why the heck are they taking photos of us? And we realized it was the car, because it's this Rolls-Royce Phantom. Look it up on the web and you'll see what I mean. You'll go, oh yeah, I know what that thing is. You know, like Arabian oil chic stuff. So anyway, struggles. These are the struggles we face now. Investing capital is too small. You're too occupied with your day job. You don't know much about the stock market. You're nervous about changing your routine, and on it goes. When you try to learn the markets, you get hit with a fire hose of conflicting information. You can't tell which information is the most critical to your trading. You have very little support from family and friends, and the economy always seems shaky, so why try? So, you know, like I said, you know, if you're a person, you've made your full contribution to your Roth IRA, and you've got $5,000 sitting around, and you have no trading experience whatsoever, then, you know, a mentorship program like they just talked about in the last talk could potentially be a good investment, because it gives you a support group, right? I'm a guy, I work on my own. Now over at Trade Mentors, they have an organization, which I'm going to show you to, but I work on my own, and I ain't no support group. I am the entire support for my operation, because I trade for my family. My only goal in my life is to make a lot of money for my family, and I don't care about anything else. And sometimes it kind of harms relationships when people figure that out, that I just don't care about anything else. Now, so you want to make sure that you get yourself into some kind of support group. So for instance, some of these mentorship programs, like the one that they just talked about, you know, I think you should, you know, look at very carefully and be very careful to pick the very best one you can find for something like Forex, because in Forex, with $5,000, you could put $3,000 into mentoring and still have $2,000 to trade, because you can trade with $2,000 in Forex. So I want to kind of give you that kind of background, is that if you're going to come out and do what I'm doing, like when I show you big numbers in the market that I'll make, you have to remember, I talked about that quote by George Adair, everything you want is on the other side of fear. Well, when I talk about like I tell people from November up, I've made $400,000, right? You know, I mean, I make $65,000 as a professor, and I've made, you know, almost $500,000 in the market with what I do with stock options. And so, you know, you have to understand that to be able to go after that kind of a big fish, I have to push myself through a much fatter barrier of fear. So, you know, if you're looking at getting into trading, I'm futures and Forex, and I'm also a stock option trader, then I can tell you that the lowest barrier of fear is going to be down in that little tiny tricycle Forex sandbox, because it's a little tiny Forex sandbox, because you can get in there. And if they tell you that you can't trade with 2,000, tell them they're liars, because you can set up a micro account and trade with 2,000. They're lying to you. So keep your investment really low when you start training into anything that's a levered kind of an environment, whether that's Forex, futures contracts, futures options, or stock options. Those are your primary areas of levering that you can get out there. Now that said, I hope you listen now. You'll have to let go of something else to spend a few hours a week on this at the beginning. Try to hold your skepticism. Skeptical, I'm gonna share one phrase with you, and I want you to share your immediate reaction in the chat box. See what a horrible speaker I am, just like blah, blah, blah. Momentum stocks. Okay, type in the chat box. What is your feelings about momentum stocks? I haven't done this talk in since 2015, so it's kind of fun, and I'm seeing where I was back in the time. Nobody's typing in. I hope that doesn't mean I'm doing a horrible job. Come on, type something in the chat box, guys. Let me read it again. I'm going to share one phrase with you, and I want you to share your immediate reaction in the chat box. Momentum stocks. They had to do my monster truck voice for you. Come on, type something in the chat box. What do you guys feel about momentum stocks? No joking around here. And I've been very kind of, slap happy here, but I've been giving you very important advice. Maybe you're in the question box. Oh, good. Ron says, I love momentum stocks. Sorry, guys, I was reading the wrong box. Like I said, I'm not a professional at this. I'm a PhD in finance, not a marketing guy. And Pam says, speechless. I love it. That's perfect. Define what momentum stocks are. That's actually a very intelligent response. Very good. From Gail. Look, Gail, here's the deal. The reason that Sheridan Titman is so famous in finance is because he discovered that if you took a simple measure, which was you said, okay, here's the price of the stock today. Let's say we've got a stock today that's trading at $100. He found that if you simply looked back and said, okay, what was that stock trading at 3 months ago? What was it trading 6 months ago? What was it trading a year ago? He found that if the stock was a lower price in the past, that it had a tendency to rise. So in other words, if a stock was simply trending upward, it beat the market, but it beat the market by a lot. What happened is back in the 60s, financial academics came up with this mathematical notion of called capital asset pricing model, CAPM, that fits together like a fine-tuned Swiss clock. At least the market model does. And then what happened was they had researchers that came in and said, now wait, there's this January effect. And then another researcher came in and said, now wait, there's these value stocks and it beats the market too. But these weren't beating the market by very much. In fact, the January effect kind of went in and out of the data. The value effect was maybe 3 or 4 percentage points. If you take a look at the geometric average of stocks looking back over like 100 years, Gail, then you're going to expect an average of somewhere between 9 and 10% if you don't adjust for inflation. So if you add on another 3 or 4% for value, then you're looking at maybe 13 to 14%. The amount that Titman and another professor, Jagadish, found for momentum was astounding. It was like up to the range of like an additional 8 to 10%. So one of the perplexing things that researchers had been trying to figure out was how in the heck Warren Buffett had become so successful, because he'd been able to generate 18 to 20% returns on average over a multiple decade period. And so this was the first evidence that those returns were actually sitting there in the data. And so a momentum stock is just nothing more than a stock that's been trending upward. And that's a very good question, because you do need to know what that precise definition is. Mushroom, we've got Mushroom Mike on the call. That's awesome. High five, Mushroom Mike. Momentum equals opportunity. Boy, does it ever. That's wonderful. That's a good psychological association. I'm seeing lots of positive associations. Okay, except for this one. Walt says, never heard of momentum stocks. That's a 0 association. Momentum is the way to go, says Steve. Usually see them after they're already on the way down. Well, yeah, what I teach you to do is see them before they're heading up or when they're just starting to head up. Hank says, like them. That's awesome. Fast electric rides, fun if you are. Well, you want to, I'll keep going here. On the right side, good, and lots of tech, recently at least. And how do we make money? Okay, good. Let's move on to how do we make money. So as retail traders, the feelings might be insider information, dishonest, Wolf of Wall Street, overpriced, complicated, shaky. It does look like you guys are certainly more advanced as traders, because I'm getting a lot more positive comments about momentum stocks, which is good. Now, these biases can get in our way. When we're blind, we focus on our biases. Biases are a huge problem. There's this whole area of behavioral finance, and it says, hey, everybody's got these psychological biases, and they trip us up in the stock market. Like for instance, Warren Buffett says that be fearful when others are greedy, and be greedy when others are fearful. And so like, when you take a look at like 2009, after the market had this massive drop in 2007 and 2008, how many people bought back in as fast as they could? I did, right? But a lot of people, I told them to buy stocks like Ford that doubled from when I told them, and they didn't do it. But that's called a recency effect. So if you have a big drop in the stock market, then what'll happen is that people will be afraid of the market just because it recently dropped. And Steve says, how do you determine the trend is set? You determine it by doing small test purchases in the market. And I'm going to give you a whole course that shows you how to do it. If as a free bonus, if you pick up the super low price software packages that I'm going to show you. 5 stocks that could have made you $178 million in 5 years. I think it's fun to go back and just do what ifs, just to see why people say, hey, look, these big returns really are here. And so if you would have bought Corvell in 2006, it would have been a 275.8% gain. First Solar, 795.2 in 07. 08, 416 gain. 09, 2,508% gain. In 2010, Entropic Communications, 293.5% gain. So the main thing is that I took you through a period that actually goes through a big market crash, and to show you that even when the market's crashing, there's going to be 1 or 2 stocks out there that are doing really well. So 37,580 becomes 178 million by 2010. Here's Corvell. That's that rise that made that money. Stocks earn a lot more. Real estate won't do this. If you guys think that real estate can make more money for you than stocks, think again. If you guys think that futures can make more money for you than stocks, think again. If you guys think that Forex can make more for you than stocks, think again. This is First Solar, and there's that nice, powerful bull run. I teach you guys how to find those. Are you thinking this is pure luck? It would never happen to me. Only professionals would know how to handle trades like that. These are impossible to find. Oh my gosh, it's impossible to know when to get in and when to get out. The stock market, oh, it's my favorite. The stock market does not work like this anymore. I hear that over and over again. I just laugh. I'm like, yeah, go away. Don't talk to me again. But hopefully this evidence has you thinking, maybe this is possible. If I could just get a little piece of that, maybe I would be better off. Maybe it's worth being open-minded and looking into this more deeply. Maybe, just maybe, I'm asking to be open-minded to the idea that amazing opportunities can be found in stocks. Let me show you my process to identify stocks most likely to become winners. Then you can decide for yourself if this is right for you. The process. Find the top 3 stocks primed for explosive growth out of a universe of 3,700. And this is important. If you guys try to make money and hold more than 3 stocks, it's over. It's not going to happen for you. The same thing in Forex. If you're trading 5 or 6 or 7 markets simultaneously, you're not going to get the big returns. You have to focus on trading big moves in no more than 3 positions. Don't forget that. Write that down. It's the truth. If anybody says it's not the truth, run away from them. They're going to start making you lose money. Narrow stocks to the most likely to become a top momentum stock. Narrow stocks to the most likely to become a top value stock. Narrow stocks most likely to increase the most in relative strength. And then simply monitor market demand for entrance and exit. It's a very simple idea. You remember the bell curve? You can, if we go 12 months ahead from right now, and we took 3,700 of the most powerful stocks in the market, and we organized them from strongest to highest returns and made a bell curve out of them, we're hunting that right side of the bell curve where the high performers are. Value and momentum are king. What you can expect on average when you're right. An index mutual fund, about 11.8%. 13% for size, 17.2% for book to market value, which is virtually impossible to capture. If you go up onto my iTunes podcast called Master Your Money, I did one with Monish Pabrai, and we jumped right on that topic. And he says, look, trying to get that book to market ratio stuff work is a non-starter. There's other ways to find momentum, but you're going to have to read Monish's book on the Dondo Investor, and you're going to have to download every single one of Warren Buffett's, his reports to the shareholders. If you decide to do value and you're in the Trade Mentor group, you can reach out through the support, and I'll get you the website, or just go look for Buffett's website. He's got it up there, and you can read all the things. But momentum was 19.2%. So momentum is the highest possible expected return out of any of those anomalies. Simple doesn't mean easy. There's details you have to master to make this work for you, but this makes sense, doesn't it? Doesn't this make sense? Type in, yes, this makes sense, Scott, in the question box if you agree it makes sense. Come on, type something, or I refuse to go on. Does this make sense to you guys? Yes, Scott. Thank you, Walt. I appreciate that. I will move on now. Getting yeses. Okay, good. So details, you can buy and sell stocks from anywhere on the planet via World Wide Web. Nothing special is needed to open a stock brokerage account. There isn't any prior experience requirement for stocks as there is for Forex futures and options, and commissions are at rock bottom. Next question. If I show you one filter to find potential high performers and you think you can do it, will you try it? Even though gains like these don't happen anymore, like they say. They do. Macy's goes from $5.07 to $70. Now, Macy's is a horrible investment right now, but look at that. I mean, from 2009, that thing went from $5 to $70. That's psycho. That's the actual data. And I've got another yes from it looks like Wallace. And by the way, one of the things I'm really enjoying that I'm seeing, we've got 110 people on right now, and I'm seeing a lot of women, and I'm really pleased that is happening. We have numerous academic studies that ask the question, are women or men better traders? And they're inconclusive, which to me just says, well, our minds are exactly the same. So I firmly believe from the research that women are equally capable of investing and trading as men are. And I know that we're getting more and more women coming into this. So I'm always particularly pleased when I have women coming into the community, because traditionally women have not been taught financial skills that boys have been taught. So there has been traditionally a gap, and there still exists a gap in the financial literacy between men and women. But the ability to do it is identical. It's just a gap in training is all it is. So I am very pleased to see that we're getting more and more women onto these calls. Facebook surges from $27.50 to $72.50. I started buying in, this is September 2nd in 2014. So I started buying into Facebook somewhere back in this range back here. So basically you're looking for volume patterns, and this is how I find these. And now you're going to get a course. Like I say, if you join the Trade Miner software, if you get that software, then I'm going to give you a $200 training. If you get both versions of the software, I'm going to give you $400 of trainings for free. So stay tuned. I'm a horrible marketer. I just blew my whole big offer, like, to get y'all excited. And I already told you the big final thing. Like I said, I'm not a marketer. I'm a trading finance PhD guy, professor guy. Find the top 3 stocks primed. Did I go backwards? Yes, I did. Oh, okay. This repeats the process. Okay, the macro picture, timing your trades to make money in a bull market, minimize losses, or even making money in bear markets or economic downturns, proper stop loss placements. And by the way, I alluded to it, but I am a millionaire from the stock market. So I'm not a guy, when I say how to build $1 million portfolio from scratch, because Land Turner has a brokerage, I actually would not be allowed to actually give you the name of this presentation if I hadn't actually done it. So I actually am a millionaire from doing what I'm showing you to do right now. And how often is it that you got a guy on a call, especially that's kind of got talking kind of like a dork, and say, well, you know what, I became a millionaire doing this stuff. I don't know if I got your attention or not, but if I were sitting where you were, I would be paying closer attention. Proper stop loss placement, money management, beyond simple filters like the IBD, little known sources of secret but public information, how to think independently, and much, much more. How to find value and momentum. Let me give you a free tool you can use right now, NYSE, new highs and lows prior 52 weeks. That's real useful. You can go actually go out there on the web every day, and you can just cull through those new highs and lows prior 52 weeks, and then just go look at the chart patterns for price impact on high earnings like I teach you, and you can fish out some amazing deals. The thing is when we're in a bull market, you may have 100 stocks that could make you a millionaire, when we're in a bear market, maybe there's 5, right? So, you know, usually what I try to do mostly is when I'm in a bear market, it can be very difficult for me to spot the rising stocks, like I showed you in that example. I didn't actually do that in that example, where obviously being 170 whatever million or whatever it was, 100 whatever million. But I do know that as long as that I'm applying my proper filters, that I'm pushing myself into the side of the pool where those big returns are. And so if I'm being really careful to test with small amounts of money, and then if the market breaks back on me to get out, then I fly, I'm gone. And then I just keep testing till I find a stock that holds and does really well. Like for instance, Facebook, Fiat Chrysler, Berkshire Hathaway, Apple when it was rising. Of course, Apple has I switched from Apple to Facebook after it dropped in 2015, and so you know, I've learned kind of the hard way what I'd known, which is, you know, stay on a good strong stock. Here's the NYSE new 52-week value lows. So you could spend all your time, 365 days a year, not spend a dime on any training or anything, and find stocks that would make you a millionaire if you know what I teach, and just you're methodical. You know, it's like the difference between a millionaire and somebody who's not a millionaire, I believe, is that a millionaire is going, and once that millionaire figures out the steps that they need to take to become a millionaire, and usually it's something not super great fun every day, they do it no matter what every day, just like Michael Phelps trains for the Olympics. And so that's why, you know, when you get these, you know, big gurus talking with, you know, where the people can't hear them, they're like, oh, those butts in the seats, none of them can make money. And the reason is because they're in an Olympic event, but they're not trained for it, and they don't even know that they need to train for it. Find the right stocks is the game. You have to get it right and sit tight. That's it. Get it right, sit tight, do nothing. So why is this important? Capital is attracted to the top. This happens on no news. Professionals move on independent analysis before the stock has already made a spectacular run. So piggyback the smart money. Bottom line, do you think you're going to hear about these opportunities on Mad Money? No. Good stocks scare the public in the beginning, because again, the public's afraid of rising stocks. You have to unwire that and learn to buy rising stocks, not be afraid of them. They only hit the news after they perform. From the bell curve, you know that these random news tips are 50-50 odds at best. So you have to learn to completely ignore the news. Now, there's sometimes when I need to know something because the market's shaky, and I specifically go finding news. But other than that, I completely ignore the news. Like, for instance, I heard that Trump's having a hard time. They're talking about impeaching him or something. Is that true? I am not joking. I literally don't care. But go ahead and type it in and let me know whether or not you guys think they're going to impeach him or whatever. I don't know what's going on. Fast rising growth and value stocks helps if well-known solid businesses you recognize by short household names. Helps if no or little discussion as to why rise is occurring. Trading under $100 per share for momentum. Trading under $10 per share for value. You know, I mean, like, for instance, the EPA, you know, just did a big fine, or just did a case against Fiat Chrysler because of emission things. Steve says, how many stocks do you put in a portfolio? No more than 3. No more than 3, Steve. I heard something about Trump kind of falling apart. So I figured that that's why the EPA did it, because the Hillary people over there, you know, want to go after Fiat Chrysler. And, you know, like, I don't care, pollute the world. Someplace will still be nice enough. As long as I'm rich enough, I'll go live in a nice part of the world, just like Elysium. Like I said, I'm not the guy that's doing the course for $5,000 and I'm going to give 10% to save the homeless whales. I ain't the charity guy. I'm the charity starts at home guy. Go away. Please do not bang on my door. Okay, why under $10? Low price shares allow you to reduce risk capital. E.g., my cheap option trades do the same for higher price momentum, typically $10 per share to test. All I do is ride along like a surfer. I don't make the market. And so, you know, you want to keep your ego down. Get rid of the ego, because you don't make the market. The market's going to move the way the market is going to move. And you've got to do your analysis to make sure that you're hitting that right side of that bell curve. The best candidates are value stocks that are cheap. Momentum stocks are expensive, but both are rising. My value play was Fiat Chrysler. A good example of momentum play is Facebook. And again, you ride the wave like a surfer. Look for proven demand. Once you found a candidate, look for demand and expect pullbacks or reactions. A lot of people get jittered up because the stock will go up to 120 bucks and then it'll fall back $12, $15. That's completely normal. If you go read W.D. Gann and Jesse Livermore, you'll see that even back at the turn of the century, everything was just the same. Watch diligently for the big difference between a normal pullback and a loss of interest. And I probably got something like Tourette's or some sort of, borderline Asperger's. I won't take the Asperger's test because I am the most WYSIWYG, don't care if I offend you, don't care person. So I hope you like me. I mean, I kind of like polarizing. About half the people like me, half the people can't stand me. So we'll see. Type like if you like me. Oh, it'll make me feel so good, and then I'll forget about it in about 2 hours because I don't care. A comment about demand. Spikes in demand tell us one of two things. The stock is a volume winner, we should buy. The stock is a volume loser, we should sell. Institutional buyers such as hedge funds are thought by practitioners to drive the market. No evidence of this exists. No evidence exists of manipulated volume either. Volume spikes are likely caused by cascade effects from when informed large bets tip off cascades of smaller bets. And the first person I ever read that talked about these cascade effects was Bob Shiller from Yale. Bob Shiller shared the Nobel Prize with Fama in 2013 for their contributions to efficiency theory. A comment about demand. This is something that I've made money on for many years. Do you think I know a way to help you spot demand and when demand dries up? Even if you don't know what you're doing, can you make money following demand? Are opportunities like these good enough to go through the effort of finding and managing? In practice, now listen carefully. Your first tries, you're going to probably lose, but your risk is will be under control because I have you place no more than 5% stops. You'll never feel like you get it right much more than 50% of the time. But if you experience what I did, some of those winners of the 50% that work, there's going to be one or two of those that are going to just rip. And so what's going to happen is you'll start with this test purchase, and as they'll start to really do well and move up quickly, they'll start to consume all of your capital. So you'll go from a test purchase to scaling in. So I hope you listen to that really carefully because that was an important point. Do you think it's possible to find value momentum stocks that look strong but weaken? Yes. And still make money on it? Yes. If you are managing your stop losses properly, you can have a stock that you get into that rises $10, $12, and then you get stopped out as it falls back too far, but you still make maybe $1 or $2 a profit, and you'll just chuckle because you go, that was a horrible trade and I still made money on it. Would you guess that most retail stock traders know none of this? Oh my gosh, do they not know anything of this? I actually used reasonably good grammar there. Holy crumbus. But there are concerns. Should I even share this information with anybody at a price? Because, oh my gosh, it'll get arbitraged out. No, it turns out it won't. Would I be better off just keeping this information to myself? I'm going to rip through because I kind of want to get to you guys' questions. This is all marketing stuff. A friend of mine helped me create this who's a first-class marketer. Okay, look, here's the offers. Here's the deals. And then I'm going to start answering questions. So don't pop your questions in there yet, but let me show you this stuff. So if we go over here to trade mentors, options.htm. So trade mentors, options.htm. And I'm going to type this in the chat box for you guys. Oh, it may not let me do it. I probably offended everybody and they shut off the chat box. Well, I hope not anyway. Well, oh, whatever. Join my Options Elite Club. We're not running that. I had some problems with that platform, so I've shut down the Thinkific platform. And if I get it back up, I'll offer that coaching service maybe. And I may not. I mean, like I said, I kind of enjoy my privacy and I like to kind of stick in my room and trade by myself. And if you just get my training packages, you'll learn everything you need to know anyway. And I do 4 videos a week where I'm showing you potential rising stocks on Tuesdays and on Thursdays. So if you come over here, you see you've got trade minor stocks, futures, and Forex. It turns out there's a really important study from the University of Chicago that came out in the last few years in the Journal of Finance. And they showed returns that were comparable to momentum. Now, I've been making enormous returns in momentum. So I haven't really needed to augment my momentum system, but I am challenging anybody to go out there and work with seasonality. And if you're working with seasonality and you contact me, you've got my full attention, because I do know that there are huge profits in seasonality. I've created a training for it. I think that this software package is, I think it's not more than $100. I think it's $97. And then there's a data feed that I think is $7 or $8 per month, because the company has to pay for the data and then pass on the expense to us. And so I'm subscribed, and I've got the package, and this is it right here. And it will, with just a touch of a button, it'll kick out a list of stocks that could potentially be exhibiting high seasonal returns. And so then you can take that and you can go to to the chart, and then you can do different kinds of analysis and so forth to determine which of those stocks could be a rising one. Now, what I do to find momentum stocks, I was just asked, how do I identify the trend, whether it's rising or breaking? And what I do is I had my own tool created. It was actually programmed for me, and it's called Chart Miner, and it's also like $97. So for no more than $200, and then between the two, I think you'd have maybe a $15 data feed. You'd have the most powerful filters for stocks. And so what I do, there's 2,995 stocks in the database over here in Chart Miner. And that's the stuff that I'm an expert at: data, math, finance. It's like I tell people, I'm a lot more happier to have a party with data than I am with people, just because I'm not a people person. And I'm a finance person. I make money in the markets. This is my gig. This is my mojo. My mojo is not selling people and making people my buddy and all that other social stuff that to me is like a massive waste of time. So I'll go in here every 3 months and I'll do a retinal scan. I actually click from chart to chart to chart, 2,995 charts, and it programs my retinal cortex. We have studies in psychology that show that even people with advanced Alzheimer can still remember all the faces in their yearbook. So we can remember every single chart we see just as long as we flash them across our retinal cortex. So I use that for finding momentum. And then, of course, there's this seasonal stuff that's really powerful. And even if you don't sign up for the software platforms, go right now to Trade Mentors and sign up for the free membership. And I send out 2 different videos of the stocks that I actually consider to be hot rising stocks. And they really are. So if people knew that I was actually showing the stocks that I'm actually looking at, they would be jumping over and getting on this free subscription to Trade Mentors, because I give way better recommendations than like at the Oxford Club where I used to work, obviously because I have a PhD in finance and I actually make money at this, and it's free. And I'm giving way better information. If you want to get the Oxford Club President's Circle membership, it never sells for less than $5,000 to get all those newsletters that do way worse than my recommendations. So if you want to get, $5,000 worth of stock recommendations for free, go over and sign up for the free bonus right now. Now, if you want to get real serious about things, go sign up for both Trade Miner and Chart Miner, and then send me an email at support@worryfreewealth.com. Let me get the thing up here. And before I do that, support@worryfreewealth.com. Where is it? There it is, support@worryfreewealth.com.